ahead.
All right, we have some participants and attendees joining. We're going to give it a couple more moments and then we will kick off. All right, why don't we begin? A very good day to you all. Welcome to the latest Wall Street Blockchain Alliance virtual event. Our topic today is analyzing the Polygon attack. Before we start, a little bit of housekeeping. This event is being recorded. It is provided for general information purposes only. My poor friends Dustin and Tanya are tired of hearing me say this. Nothing discussed at this event should be considered legal, investment, accounting, tax, technology, or any other advice. All attendees will be in listen-only mode. We will reserve time, certainly at the end of the session, for Q&A. Please, throughout the session, feel free to submit your questions via the Zoom chat as well. My name is Ron Quaranta, chair of the Wall Street Blockchain Alliance. It's a privilege to be here. I want to kick off and give our attendees and our panelists, rather, an opportunity to introduce themselves. Sonia, can we start with you? Say hello to the audience, please. Tell us who you are and what you do.
Sure. I'm Sonia Goklani. I run a small fintech startup called Triad. We basically work in the derivative space. We actually built out a limit hub for the exchanges and really work with regulators on the Dodd-Frank side. I actually work with Ron on the enterprise working group. I chair the group, and we also work in the blockchain space consulting. So thank you, everybody.
Thank you, Sonia. Mr. David.
Thanks, Ron. So my name is David Brill. Many of you know me. I am the chair of the Crypto Assets Working Group, founder of Brill Advisors, which is a strategic and legal resource for crypto companies and exchanges looking for advice and guidance in this space. As well as I'm a known investor and host of the High Volatility podcast with our esteemed host, Ron. I just wanted to say that these comments I make today are my own and not of the company or representing Wall Street Blockchain Alliance.
Thank you, sir. Mr. Dustin, my old friend.
To find unmute. Hi, everybody. I'm Dustin Brewer. I'm the Senior Director of Emerging Technologies and Innovation at ISACA. We're a member-based nonprofit organization worldwide, and we serve the IT audit, cybersecurity, IT governance, and IT in general community. My role particularly is to take a look at different emerging technologies that are on their way into implementation and to provide content for our member base on security of forensics of IT audit of those different technologies. It's a pleasure to be here.
Good to see you, Dustin. And Mr. Callahan, sir.
Sure. Thank you, Ron. Sure. My name is Bill Callahan. I am the Director of Government and Strategic Affairs for Blockchain Intelligence Group. We are a blockchain and cryptocurrency forensics and risk assessment and investigator training company. Prior to joining with Blockchain Intelligence Group, I was a special agent, held numerous positions with the Drug Enforcement Administration, and primarily specialized in money laundering investigations.
Great, thank you all. So let's level set for those of the attendees who may not have knows what happened. About 10 days ago or so, a cross-chain DeFi platform, Poly Network, was attacked. Alleged hacker took, and I think someone correct me if I'm wrong, it was the largest crypto theft, about $600 million or so. And then in this weird turn of events, the hacker returned it to them in some way, shape, or form. And I'm certainly oversimplifying that. But it really does highlight the kind of perils of decentralized finance and the opportunity there in many ways. So I want to kick off with that. I'm going to stop sharing the screen. Bill, Blockchain Intelligence Group really spent some time putting together some data and metrics on this. And I want to bring it up for the attendees if we could. And maybe you could walk us through some of the perspective here.
Sure, Ron, glad to do that.
Yep, bear with us. And Bill, to kick off, let me know when to move to next slide.
Sure. Okay, so anyway, yeah, so August 10th is when this attack took place, right? I mean, like you said, it was $600 million worth of cryptocurrency were stolen by this attacker, who we don't know who the attacker is, just by what he, her, it, them have identified themselves. It's also to note that this attack took place over the Ethereum blockchain. The attacker exploited, and we'll show you in a minute, smart contracts on the Poly network that were used to carry out cross-chain transactions on multiple blockchains. As you can see there, the different blockchains that were involved in this. Which is make this investigation or this activity unique is that the attacker has been returning the money. the victim, the Poly network, has asked for the money back, and they were returning it. And Ron, just the next slide here, what we'll do is just show you the amounts that were attacked. These are the addresses. This is the different coins. So you see it was BSC and Ethereum and Polygon. And then the amounts that were stolen, yes, you can see right there from which wallets. So at, yeah, you can go to the next one, which is fine. At Blockchain Intelligence Group, basically what we do is graph out the blockchain. And you'll see on top the two circles. This is basically the start of the events here. The attacker from the WHO on the left side there, from the WHO exchange, sends some funds over to the Poly network, and with instructions. And what we didn't chart out, it gets confusing. It gives messages to various contracts to do certain things. The monies that were sent over from the WHO, we believe were used as gas fees to cover that. And then the chart below, this is showing the token transfers to the Poly network hacker's address. And for the purpose of these slides here, for visualization, when you see the blue circle around the yellow circle, that is the attacker. Okay, just so you know. And then the other one would be somebody else, but the blue is the attacker. So you can see the flow going back and the different addresses that were used. On the next slide, the graph on top shows the messaging, which has also made this unique, and I know we'll talk about, is that the victim or the Poly network, which was attacked, engages in conversation. So we'll see that flow as well, and we also will be able to visually see the messages. In this instance, most of the messages came across unencrypted. However, there were a few that were encrypted, and that's something we may mention later on here. The bottom slide shows some of the funds being returned, the provided. Go to the next one. Yeah, this is a graph showing the hacker returning funds to the Poly network. So again, and this is something that an investigator would use, law enforcement, a private investigator, or an institution would use this to see the flow of the funds moving. The next slide. This was also something that was interesting here. Again, another flow of currency. This one, yeah, this is 48,000. There was a flow. There was also a flow of currency, and I know we'll probably talk about it, where the attacker was receiving messages on the blockchain, in particular about funds being frozen, and then the attacker sent a tip of money as a thank you note over to the tipster. Call them the tipster. And finally, the next slide, Ron. This slide here just shows a complete flow, putting those two flows together of the currency. If this was larger, we would also chart out the contracts that were involved and to show that flow. But we just wanted, for this purpose, to show the flow with the attacker being in the middle, flows coming in and then back out the Poly network.
Bill, I know we talked about this, but while we're doing this, why don't we put this forward here, and we can resurrect these slides as well. But you made some really interesting points about the content of the messages, both from an encrypted perspective and a unencrypted perspective. Do you want to talk about that for a brief moment? And then, Dustin, I want to bring it to you from a cybersecurity perspective as well.
Sure, absolutely. And this is something of interest to me. While the flow of funds as an investigator, is interesting to me, I look at this, okay, any criminal organization, the lifeblood is communications, right? Any sort of criminal activity, you're going to need the communications. And in this instance, what we're able to pick up, because it's on the public blockchain, we were able to pick up the communications. So Poly Network initially sent over some communications to them. And there were a number of communications. We have them all sketched out. We're not going to go through them all here. But as you can see, this is what it would look like. We pulled this off of Etherscan. This is a unencrypted message. And I don't know, you have the next one, Ron. The next one would be a unencrypted slide, if you have that one. So, sorry, this is encrypted. This is an encrypted message. And again, from that law enforcement perspective, this is what always concerned me: the unencrypted messaging. Law enforcement has tools to eavesdrop, right, through court orders, but different technologies has made that harder. So again, what if this were, a terrorist organization, drug trafficker? While the argument is, well, it's on the public blockchain, you can see it. Well, that's later on we discover that it's there. Yeah. And not in real time. So those are the ways that they were communicating.
Thank you, Bill. I'm gonna take share off. I want to bring the rest of our panelists to this stage. And Dustin, I wanted to go to you if we could. You and I spent a lot of time talking about how the surface of cybersecurity evolves in a crypto asset and blockchain world. And I would argue that it's getting more complex with DeFi and decentralized finance. And we often hear, you and I have been having the conversations for years now about, well, blockchain was hacked particularly. Let's peel back the layers of what was the real cybersecurity failing here. And in my mind, many of them can be simply avoided. But I wanted your perspective from a cybersecurity expert.
Yeah, absolutely. So from a programming standpoint, I think that's where the issue comes in, right? We have these smart contracts, which somehow the attackers were able to input data into these smart contracts and able to execute a function that they weren't supposed to have access to, right? We see this all the time in cybersecurity. It's nothing new. It happened on the blockchain this time, and it happened on a smart contract. And I think what usually happens, especially with blockchain, is there's this, I guess maybe a false sense of security, because you and I have talked about this before, where blockchain is kind of a cybersecurity solution, right? So when we talk about cybersecurity and we talk about the cybersecurity triad, which is CIA, confidentiality, integrity, and availability, blockchain kind of solves some of those issues, right? It gives you the availability on a public blockchain. It gives you the integrity, right? And that's the big piece of it. And so with that kind of false sense, people who utilize the blockchain and people who develop on the blockchain make certain assumptions and say, you know what, this is a secure infrastructure. We can kind of go to town coding on this and not really have to follow, secure development operations or anything along those lines. That's one part of it. The second part of this, which I find really interesting, is we are, as mentioned before, we're on this open public blockchain, right? The Ethereum chain or code is out there. Everybody can read it anytime, right? Anybody can go through it and look for different vulnerabilities or issues with it, right? And this, we've seen this shift kind of to open source software in the IT community recently because of that. Because if there is an issue with something, you kind of have this free this free line to hundreds, thousands, millions of programmers who can sit there and look at your code and tell you where things have gone wrong, right? And that's kind of what happened here, or at least that's what this particular attacker is claiming now, after it's all said and done, is they're like, well, we were just testing and trying to exploit this code and it worked. And yeah, we took $600 million, right? I'm sure we'll get into it later, but it was a test, right? It was something that, and they actually brought it up to Poly and they said, hey, here's the issue, here's how you can fix it, and they fixed it. And then like Bill showed earlier, they actually did send roughly $500,000 US over to the people responsible as somewhat of a bounty. And then the other issue that we see, now we're kind of seeing this trust issue between the group who exploited the vulnerability versus Poly, who are trying to get their last little bit of money that was stolen out, right? So, and this distrust kind of is deep-seated in cybersecurity between somebody who is submitting a bug or submitting an exploit or vulnerability, even to a bug program. Sometimes they still get charges pressed against them, right? And that's why there's this whole new kind of wave of security experts who are basically security brokers. So they never really have to tell anybody their name. They never have to tell the big companies the name of the attacker, but they can get the bounty for them and they can still get it securely. So there's a lot of mistrust on both sides here, and it's all just very very ingrained in the cybersecurity culture. So it's an awesome case study, really. Seeing these messages go back and forth on chain, which is just it's crazy. It's crazy that we kind of have this chronological record of how this attack is working and what's going on. Like there's not a whole lot going on in the background that we know about, right? Obviously, because it's going on in the background. But the stuff that we're seeing in the foreground is really amazing.
Dustin, thanks. And I want to open this up for the rest of our panelists because I want to peel back the layers of that a little bit. And we started our kind of prep session talking about why the heck would they return it, right? Like what's the play here? And everyone's got a little bit of conspiracy theory. I want to open that up for Sonia, Bill, and David as well. What's your take on the why of returning it? And we were kind of joking a bit earlier, you don't want the attention of the FBI, but Bill, you said something really interesting, which was, hey, we gave the money back, so no crime. And that's not how it works in law enforcement. Sonia, let me open that up for you and give Bill and then David an opportunity as well.
Okay, I'm going to put a kind of a conspiracy theory around this, that it's actually, he wants to be part of a Hollywood movie here. So he actually did that. He wants to tell his story to Steven Spielberg or something. Jokes apart, I think there are a lot of crazy people out there who just like to do things just to prove a point, essentially. I mean, they are extremely genius people, and I've actually worked with them many years, the PhD quant people we work with on the street who just want to prove a point. And they, we're calling him a white hat hacker here, but technically, like Dustin, when we were discussing earlier, he's actually a black hat hacker. I mean, he wasn't given access to it. So, and he still went ahead and did it. So it's a good way to figure out, that yes, there is in the layer 2 network, there are, loopholes out there. And, the DeFi market, as Pope just mentioned a couple of days ago, has had the maximum hacks. So I think one of the reasons these hacks probably happening in the DeFi space more is because their infrastructure is still in infancy compared to the other token infrastructure. I kind of draw a parallel to the traditional financial markets where I grew up in, and where the securities infrastructure, like the equities, fixed income, trading platforms, were more robust versus the structured product platforms, which took some time for evolution because in terms of the trades going on it. So I kind of draw a parallel there, and I see a very strong similarity between the traditional finance and the token world, or the crypto world, or whatever you call it. I kind of equate DeFi to the structured world, which still needs to evolve. And once the institutional adoption comes in, I think there'll be more emphasis on different security protocols being put in, and there'll be more investment into these kind of the loopholes will be closed, there'll be better technology out there. That's how I look at it. It's from the experience I come from.
Thanks, Sonia. And I want to give David and Bill an opportunity to chime in. And for the record, I'm going to start on the screenplay later on this afternoon, Sonia. So well done. But David, any perspectives? You've been deeply involved in decentralized finance. You've forgotten more about it than I'll certainly know. Would love your perspectives on some of what Sonia and Dustin had mentioned as well.
Well, look, this is a great industry that's developing, and if this wasn't financial services and we had products that were evolving and there were bugs in it, we would write it off to software development, and maybe the beta came out a little too soon, this or that. I think in DeFi, obviously there are higher risks with that, and we have to be cognizant of it. I think the lesson learned here is that not only do we need to test the code to make sure it works and that the swaps are able to be accomplished, but somebody has to do that next layer analysis of doing, like when you have an interoperable chain, that smart contracts can't be pierced when doing multiple transactions across different chains. And I think some of the issue here may be there's just not a lot of experience with that, because this is somewhat new and complicated, and especially doing it in the DeFi format, whereas people may have been doing it in, like BSC has had some challenges. And so this is evolving, but I think the layered complexity of it is what added to the issue that ended up being exploited. I do think it's interesting, and I query to our group, do we think that the issue of, I don't want to use the word laundering, do we think that maybe this hacker group became a white hat group because they couldn't funnel the money that they acquired through this exercise, and because they couldn't funnel it, they decided that they needed to come up with a plan B? And curious to know what the group thinks about that.
Are you basing that, David, on the size of the dollar value size? I mean, Bill, from the perspective of law enforcement, how easy is it to make $600 million in crypto funnel and disappear away? You folks at BIG track this all the time.
Right. You're right. There's difficulty in laundering funds, especially that amount. However, in crypto, where you can put something on a cold storage wallet and lock it in a drawer for a couple of years, or break that down even further, if I was a true money launderer, I would have a plan in place on how to move that much money. How can I move that much and break it down in further, right? So even if they took it off the chain, put it to cold, yes, we have the tools that we could set up a watch for that address to come live again. But again, by the time it comes live, it gets broken down. Or one of the issues with this is, where are they going to exchange? Where are they going to take that money and liquidate, right? We do know that there are a number of non-compliant exchanges and peer-to-peer exchangers. We saw that in drug trafficking, where you could exchange Bitcoin for cash fiat currency.
Now, I think it's interesting because I wonder, because it was such a large amount, sort of the audacity of it all, but more along the lines of, if this was a smaller amount, would that have been would it have not been as so much on the radar, and maybe that would have been easier to move and sort of take off chain, into some sort of fiat currency. But because it was so large and had so many eyes on it, it really made it almost impossible to move that around, and sort of facilitated this plan B that's occurring now.
So I'd like to add to that, David. I mean, I don't know why, are they calling him a white hat hacker so that they could get the money back from him? And they're trying to make him feel better about it, that, okay, fine, you found the loophole, now come on our board. And they're actually offering him $500,000, bounty, and saying, okay, you found the loophole, now come and become an advisor with us. So that could be also a ploy. I mean, in some ways, trying to, get the money back. I mean, so that could be one of the strategies that Poly Network is coming up with.
Well, I think it's clever for the person or group who's done that to call themselves Mr. Whitehat. I guess, and my sense is that this isn't a donation, that this is an encrypted negotiation that's going on. I guess my question is, do we think if this was only a $2 million intrusion, do we think that they could move that off chain and liquidate that without feeling comfortable that they could do that? Or is it just because it's so big, it's almost impossible to do that without running into a lot of bumpers in different places?
Yeah. So real quick, this is just my perspective on it. This was not an unsophisticated attack. This took a lot of forethought. This took a lot of reverse engineering of different smart contracts. These are very technically minded people, or a person who did this, right? I would have to think that if they were, if they knew the ins and outs of the blockchain that well, the Ethereum blockchain specifically that well, that they would also know then how to launder it a little bit better, or how to get out of, or how to liquidate it, however they needed to do so. Whether it was, $100 or whether it was $600 million, they still would have the capabilities to do that. So again, and we talked a little bit about this off before we even started, my vote for this whole thing is that it was, it might have been actually the other way, where they were trying to test this out, and then they got $600 million and they were like, could I walk away with this? Is there a way for me to get, that's a really hard thing to walk away from, right? I would be hard pressed if it was me, but eventually came around and decided, what the right thing to do here is to kind of return the money. Again, just my 2 cents. I think that's more likely the case that happened here.
Thanks, Dustin. Bill, and I want to go to you, and I need to explore that a little bit, and I hope you'll forgive me, all of you, but we keep talking about the size of it, right? But Bill, from a law enforcement perspective, from a tracking perspective, we've seen the mixers and these kind of capabilities that illicit actors use. And in my mind, it almost strikes me as, well, it's 600 million in crypto. There's a capability to kind of shuffle that deck and move it around quite a bit. Did that not happen here? Do you have any kind of perspective on why that might not have happened, or what a risk that might be in the future? Will there be $1 billion hack that got mixed and tumbled?
Yeah, so I think to Dustin's point, this was a very sophisticated attack, intrusion, a trespass, right? I look at this as we've all been to around, a famous site like the White House or something, right? We walk around and we know that the perimeter around the White House is always changing on security threats. So one day you could wind up being on the other side. Now, that doesn't mean you purposely intruded, and the Secret Service will kick you onto the other side, right? As opposed to getting in and starting to take the China and pocket some souvenirs from the White House, right? But I think to Dustin's point, that this was a very sophisticated attack. But if this was a true attacker, and I have some questions on who's behind it, but the attacker probably didn't think about it from the money laundering side. Or maybe was thinking, okay, maybe I get a few dollars and I could stash it away, but didn't think, oh my God, 600, I don't know how to do that. So that infrastructure probably wasn't there. Those resources weren't there of having the money laundering side. And that's probably this negotiation. Oh, well, yeah, I got to give this back because I don't know what to do with it. And then he starts to see, oh, I can make some money. Because remember, the attacker also does give this money away. So there wasn't this straight up thought, hey, I'll break in and I'll show them that their windows and doors aren't locked properly. They said, hey, oh yeah, I don't care about this money here. You get 48,000, I think, or 47,000 to somebody, and somebody else got some tips. So he's ready to give it away. Now, what happened to that's another story, right? So I'm looking at it and saying, well, maybe somebody didn't think about what do we do when we get the money. If this was a true attacker. And I still, like I said, earlier, have some questions on the who and what's behind all this.
It's funny, David, you and I come out of the financial world, the financial services world. I almost feel like some part of this is just, did someone fat finger entering the number and made a mistake and realized, holy crap, that was actually 600 million. I meant it to be $600. Let's step back a little bit, because one of the things we talked about as well, and Dustin, I think you kicked off this discussion on smart contracts and auditing. And I have the opportunity, and a lot of us do, with talking with legitimate technology companies that are looking to create smart contracts, that are trying to figure out the best way to get involved in the decentralized finance space. And when you ask these questions about who audits this, who reviewed the functionality of a particular smart contract or particular engagement or interaction with an interoperable blockchain, for example, the answer I often hear, and I'm not a deep technologist by training, Dustin, but is often, well, we did. And in my mind, that's really not the proper way to kind of audit the technology. How does that landscape look? How does that change? And are you seeing the same thing?
Yeah, anytime, if you're, and this is the big thing, right, is interoperability. And we talk about that so much with blockchain, right? Because it's one of the biggest problems. When you say interoperability, to me, automatically my mind goes to APIs, right? And it's like how they can kind of interact with each other. That opens up your attack surface just so much, right? And you have to have that availability for other chains to be able to talk to you, right? So there's that. The other thing is we are seeing this revolution kind of happening right now. Like I mentioned, the open source revolution is kind of happening, where it's almost like companies are kind of transferring that risk over to the open source community and saying, hey, programmers of the world, go through and try to break our stuff, right? We see the bug bounty programs also doing that as well, with places like Google, big companies like Google and Microsoft are doing it. And obviously Poly is too now. At least they did this one time, right? But we also see the internal security development operations teams starting to get built up in major corporations as well. Meaning that not only are we, do we have our development teams and our cybersecurity teams, but we have a bridge between those two things now. And the cybersecurity and dev teams are supposed to work together in order to ensure that, whether it is done internally or whether it is done by a third party or even an auditor, an IT auditor, it's something that needs to be in the process. It needs to be documented as well. So, but even with all of that, we still, one of my favorite sayings is, even though you have these new security functionalities and these new technologies coming out, they're still built on the same old infrastructure that we've had since basically the 1970s. And it wasn't, they didn't make those for security. They made them just for communication. Security wasn't even really a concern until hackers started kind of jumping in there and doing their thing and getting the launch codes, right? So, we do see this new revolution kind of happening with this way of thinking and thinking securely, creating a culture of cybersecurity within a company and within the developers. And I think that needs to happen with blockchain developers as well.
Dustin, thanks. And for the audience and attendees, obviously we're going to have some time at the end for Q&A, so please enter your questions. Happy to recite them out and chat with our panelists. I want to expand upon that as well, because Sonia, Bill, David, we all work in some ways directly or indirectly with technologists across the different platforms. Sonia, I know you've been doing it for many, many years, very successfully. Is the argument then that cybersecurity, and Dustin certainly wants you here as well, is the argument that cybersecurity expertise is lagging given the rapid development of things like DeFi in the space? One of the things we often hear is, well, sorry, Sonia, go ahead.
So, I mean, I wouldn't like to stress more on the cybersecurity side as that, but, if you look at traditional finance for that matter, there have been thefts in trading systems, or there have been issues on the trading side too. I mean, there have been millions of dollars stolen on an equity trading platform or on a payment system and stuff like that. Yeah, I think, in fact, in the crypto world and the token world, and I've seen both worlds, there is more security here with blockchain. You can at least identify the person. In the past, if it was between different banks, you couldn't even figure out. It takes years to send a subpoena to one bank, and then the subpoena comes from the other bank. So it was even more difficult to trace it. There's always been fraud, whether we like it or not. We're coming from financial markets. Because this is a new area, I think there's a more hype. But if you actually compare it to the traditional finance in the back end, and there've been more fraud out there, and tracking it is more difficult. And I think our users and our industry needs to stress on the fact that yes, there's going to be theft, the new asset, there's going to be problems. But there were problems in the traditional finance too, guys. And the security is much better today. The blockchain is helping you to do that. You can track it. You can figure out where the node is. Companies like Big, CipherTrace are there to help you, figure out in terms of where these transactions are. So yes, I'm not saying there doesn't need to be a security up level, but it's already there there's a significant evolution there already, because in terms of technology, if you look at it, from traditional finance to the token world, essentially.
Sonia, thanks. And I want to go to Bill for a moment, and David, certainly you, because I want to build on Sonia's point. Blockchain Intelligence Group, been around for several years, has a pretty powerful suite of tools. Full disclosure, you are members of the WSBA. Do you see that in the conversations with clients, that the open source, transparent aspects allow them for more capabilities and tools and forensics than they thought they would have in a blockchain and DeFi world?
Yes, I mean, we do have those conversations that there is a lot out there. But again, the different conversations and how they proceed. It's also who's behind something as well. So, there is a lot on the investors here, right? I mean, when we looked at it, and I've been since this attack trying to say, okay, who's behind it? There's a lot of money with this Poly network. Did those people ask the same questions? Because there is no insurance on this, right? There's no FDIC type insurance on this, and so it's kind of alarming. Like, you have all this money here, we can't figure out who's behind it, and we haven't seen any victims come forward either. In when we saw some of these other hacks or losses, so say AfroCrypt was another big one, which probably rivals this, in size. A lot of people came forward, individuals came forward. We knew the two people behind it. We knew where they fled to, or at least assumed that they fled to. Here we don't have that. So that's another question, I think, and another question to engage in on who's behind these blockchains and these DeFi services.
Bill, thanks. David, I cut you off a bit earlier, but I want to see if you have perspectives on those comments as well.
I think it's interesting. I think that you probably are seeing people complain behind the scenes or on Twitter and things like that regarding, exploits. And, I've been reading their Medium posts every day. So I think the community's been speaking to, the folks on the Poly side. And I do think that discourse is going on. I just think it's just an interesting, it's just an interesting dynamic. And, I think every day something new we're going to find out. And so I'm just curious to see how it all evolves, Ron.
David, thanks very much. And we do see the questions that are coming in Q&A. We'll definitely address them at the end. Please keep those questions coming. David, let's stick with you for a minute, because this is familiar territory for you and I when we talk about global financial markets broadly. And one of the things that we've seen is maybe a hesitancy to be involved in DeFi writ large, but when you look at the returns and the possibilities from a financial market perspective, there's growing institutional understanding and investment to participate in that space. That said, oh my God, $600 million was stolen. What's your perspective on the mainstreaming of it from an institutional perspective of DeFi? Do hacks like this damage that perspective, or is the fact that there are tools that Bill's talking about where we can do the forensics on that, does that help assuage that concerns? What's the perspective from the financial world?
Well, really, a lot of it will depend on where you are on the risk spectrum and what, what capabilities of risk can you take with your client's money as an institution, and B, what's your risk tolerance? I mean, I think from an institutional perspective, you're going to want to be on platforms that have been tested quite a bit and, are not newer platforms in the sense that they've just rolled out, this new capability or things like that. I think you're going to want to see other people test it out. And they may have their own internal, engineers or some very smart people on their side, testing it out on their side. And I think there's a lot of that going on that we don't hear about, but I suspect, they're employing companies to, third parties to work on these blockchains and test them out. So I think, look, negative headline, I think people who are well established in the space will dive into it more and understand what happened. I think others who are on the fringes, I think it, continues to give them some pause as they try and sort out their position.
So you don't expect major money center banks to announce that they've got people looking at things like DeFi. That probably doesn't make sense for their ecosystems, correct, David?
No, I think, Ron, that they're probably doing it and very quietly.
Yeah.
And, for one thing, if they are really contemplating doing it, they're not going to talk up their book until they have a book. So, why tip people off to where they're looking at before they've already done the work? So I think there's a lot of quietly behind the scenes work being done, testing, maybe even some small test investments being done, but people are being very quiet about it.
Yeah. Sonia, you and I have been in financial services for a long time as well. Let's get your perspective on that. You have a lot of conversations with institutional folks in this space. How did this resonate with them, if at all? And what's the story or the imagery you're giving them to understand how this market's developing?
So the investors that we talk to, I mean, the hedge funds and all, I think they're used to these because they've always worked with non-traditional assets. They're always looking for the gain in it. They're actually looking, hedge funds typically, they like to work with the newer asset class. So they're willing to take the risk. But I think what would really work for them, as I talk to them, is if the regulators actually get together and it's actually more than a technology problem. I look at it as more regulators getting together and actually helping solve the problem. Catching these people. So once, there was this article today that was posted by OCC, and I don't know who posted it on LinkedIn or somewhere I read it, where if you can come up with a central consortium, which will, manage the USDC across the globe, or once the people start working together, I think institutional investment will come in, and they're open to it because they've actually, and coming from the derivatives industry, they realize that asset class is not giving them the gains anymore. So they're seriously looking at these funds. They're looking at, which ETF they want to put in money in. They want to figure out. We actually did a project with one of a client where they actually wanted to come up with their hedging strategies in terms of what collateral they can post across multiple funds. If they have a crypto fund and if they have it in Malta or some other place, how do they do it? So, with the evolution of banks coming in, the crypto banks coming in, and I had this conversation yesterday with you guys, we do see this question has been asked, the crypto banks, if they're coming in, are they going to become the next investment bank? So I do see a lot of interest from the hedge fund community, but not the traditional asset managers. Traditional asset managers like the Vanguards of the world, no.
Yeah.
they will take a lot of time to get into it.
And that speaks to David's comment about kind of where do you sit on the risk spectrum, which makes sense. Dustin, I want to pivot a little bit, and this is going to absolutely be a shameless plug for the work that you and I and Sonia that I had the privilege of doing with you all on the blockchain framework. And the reason I bring this up is that I also, for the attendees, want them to know from a technology perspective, there are frameworks around understanding blockchain implementations. There are frameworks around understanding risk profiles at a technology and product and implementation perspective. And I know Isaka and you there heading up emerging tech spend a lot of time on that. Can you talk a little bit about that, from the perspective of, and again, for all the attendees, we will have materials that we will share afterwards. What's Isaka's perspective? What's your perspective on the tool sets and frameworks that are available?
Yeah, absolutely. So, in working, Sonia, myself, you, in working in the Isaka blockchain framework, one of the main things that we really focused on, we had an entire chapter on smart contracts and smart contract attacks and how to mitigate those, right? Because at the end of the day, what we're really talking about here is software, right? It's software. Yes, it's running on a very specific type of system, immutable in a lot of ways, or immutable 100%, right? And these things are kind of always there. There's a lot of different things to take into account. I mentioned before that this is all built off of this really old infrastructure that we've had since the 70s, and that's true. So what really changes with this? Well, actually quite a bit, right? Because once we start utilizing these new algorithms and these new ways of exchanging data and implementing these kind of programs within programs with smart contracts, right? It's a very strange kind of like matrix style, like, nested type of programming that's going on. How do we mitigate the risks that are connected with all of this? One of the things that we try to do is try to shy away from focusing mostly on finance, right? Because when you talk about blockchain, we really think distributed ledger, right? Or, at least everybody on this call probably thinks distributed ledger, right? But it's being used for a lot of other things such as supply chain, healthcare. There's a lot of different use cases for this. But all of these are important pieces of information. And so, focusing obviously on the core competencies here, making sure that we understand the risks that, David mentioned, where, what our appetites are, what we really, and that Sonia mentioned, what we really need to pay attention to, all the way down to, what is this data? How do we protect it? And how, can it ever be 100% protected? The answer for me on that is always going to be no. We can never really 100% protect something. For now, right? Who knows? Maybe in the future, once quantum computing comes out, maybe we'll all be okay. I'll have to wait and see what happens there. With making sure that you're using the proper frameworks, the proper mindset to control these different technologies that are coming out, such as blockchain, and even using nested frameworks, right? So maybe you're using ISO 27001, or maybe you're using NIST cybersecurity framework, but you're implementing blockchain, so you can also take the Isaka blockchain framework and plug that in somewhere too. And so ensuring that you have these different technologies that are also that you're keeping track of them, that your cyber maturity is up as well, that you're monitoring these processes and always improving on them.
Dustin, great. Bill, do you have anything to add to that? And then I'm going to break protocol a little bit because we have a couple of colleagues that have specifically put in Q&A about the Central Bank of Bangladesh hack and comparison, but love to hear your perspectives first.
Yeah, no, I'm just going to Dustin's point about being 100%. Nothing will ever be 100%, right? We have prisons, but still things are smuggled into a prison that's supposed to be the most secure place. As long as there is some financial gain there are going to be attackers. There's going to be something. Now, what Dustin said, we've got to keep improving and get off the 1970 technology. But we also need to encourage and support law enforcement to be trained up on this. On these things as well, because this is an emerging area and this is important for the public and private sector to work together. This is not going to be something that just the government can handle to fix and to get 100%. It's going to have to take this public and private and associations like the Wall Street Blockchain Alliance to get out there and educate these groups as well. So just wanted to add that to those comments.
Bill, thanks. I want to thank Gabriel and I want to thank Manny. They both referenced a hack that we were all familiar with. I promise we didn't forget it or ignore it. Around the Central Bank of Bangladesh. It occurred a few years back. It was pretty similar in scale. And Gabriel made a good point. Can you highlight how this hack is able to freeze assets on several chains and better track funds versus what happened in quote unquote the legitimate banking system leveraging fraudulent SWIFT transactions? Can we peel that back a little bit? Bill, it might be at a technical level, or Sonia or Dustin as well. When we see that they were blacklisted, they weren't able to move some things. And it almost gives you the perspective that DeFi is a more, on a community basis, more potently able to respond to things like this versus what happened to the Central Bank of Bangladesh. Any comments on that? And again, it really is the CeFi DeFi comparison, but I'd love perspective. Bill, can we start with you on that?
Sure. I'm just a little unfamiliar with the actual attack that you're talking about, the hack you're talking about, but I would sense that the DeFi space is a little bit more centralized. There's people behind it. There's actually real people. And in this instance, there was a real person in this attack to actually stop and freeze the funds that went to one of the exchanges, right? So there is some centralization going on. I think that's probably important, and maybe what we've seen in that attack that you've referenced.
Yeah, and I think just to add to that, and I want to open up for Sonia, Dustin, and David as well, and Gabriel pointed this out specifically, the mixing of it and the laundering was through the legitimate banking system and casinos in the Philippines. So, when we have these conversations about, well, DeFi is bad, blockchain's bad, crypto is bad, there are significant damage that can happen in the existing financial system as well. Sonia, Dustin, David, perspectives on that?
Yeah, so I don't like to think of, I like to think of with DeFi that it's not that it's centralized. There are foundations in place that help maintain these exchanges and networks. So I don't like to think of it as centralization. I just like to think of it as there's a foundation that works to maintain the upkeep of the networks and things of that nature. And I don't think it's centralized in the sense of sort of ownership and things like that. It's really more, the maintenance of things and sort of the admin parts of it, which, any network will need to do, and there needs to be something functioning in that role. I just think it's very interesting to me. The issue that I find interesting is, when you have an intrusion like this, I think we have to be careful about rolling back transactions. And I think that's something that hasn't been talked a lot about in this situation is, I think we really have to think long and hard about rolling back transactions, even if we know that someone may profit from them. I think to keep the sanctity of the blockchains and the transactions on them, we need to be careful not to just be willing every time this happens to retrospectively roll back transactions on the blockchain. And so I think that's like a more fundamental issue we need to think about, along with obviously these critical cybersecurity issues.
Is that, Sonia, Dustin, any comments from you on that? And let me add to that. Is that a governance conversation, David, in the world of DeFi? At what point do we say you can't roll back or fork, for example? Sonia, go ahead. I'm sorry.
No, so you're right. I mean, it is a governance question. And like I said, like Dustin and me, we kind of agree on this a lot. You can put as many security protocols as you want in place. I mean, eventually, if you don't have a framework, and we talked about it when we wrote the framework book too, if you need to have that, the conversation between different authorities in terms of if these kind of things happen, how it's going to impact the country or the banks, they don't talk to each other. I mean, you have the IMF, you have the World Bank, you have, UN, but are they getting these organizations to talk to each other, or any other regulatory body? Are they getting them to talk to each other? I mean, the failure is at the people level. It's not always at the technology level. I mean, I hate to say this coming from technology. You really do work hard to put in all those security controls, but putting in the right controls, and that's where SACA comes in for being, helping people to build systems using proper processes in place. That is the key. Technology is only the enabler at the end of the day. It's if you don't put a process in place, you don't put a governance structure in, it's not going to work. It may be the best technology, blockchain or whatever it is.
Dustin, the only word you've heard more from me than interoperability in the past few years has been governance. So I'd love your perspectives on this as well.
Yeah, I'm 100% behind what Sonia was talking about. I think the only thing that I would add on to that is ensuring that you're maturing those processes as well. Because even though you have a process and you put it in place and you programmed everything, like I'm sure that Poly Network probably had that with their smart contracts, right? And somehow something slipped through, right? Whether it wasn't in their process or it was ignored. So going through and making sure that you're updating those processes as well. governance, right? That's 100% what we're talking about here. I will say that, we kind of going back to Bangladesh and kind of what happened there, we've had this blessing and this curse in society where everything's been digitized, right? Again, it's been a blessing in a lot of ways, especially since COVID. A lot of companies were able to have business continuity. A lot of people were able to keep their jobs because we have kind of moved everything to our digital selves, right? To our digital personas, our business digital personas. It's bad because then it's there too. It's out, it's somewhere, right? And yes, governance, security, all of those things need to be taken into account. And when you think about it, there is this disconnect, and Bill, I'd like to get your perspective on this. I think there's this almost disconnect when it comes to the criminal element, or maybe not even the criminal element, just the idea that we lock our doors, to keep honest people honest kind of thing. But if somebody finds a loophole in something, I almost feel like there is this disconnect and this sense of, we're going to steal from this faceless corporation, or we're going to steal from this, multi-billion-dollar crypto DeFi exchange, or we're going to steal from like all these. And because it is digital, do you see that a lot of the criminals who are kind of going into this, or again, maybe not criminals, just people who are curious, who are breaking law, basically, it's easier to do so because it is all on a digital platform?
I don't know if it's easier. It does take some skill to do this. Is it easier to break in my house, because I live in an old house with older windows or something, or basement windows I can kick in? That makes it easier than having to break into the 20th floor of a penthouse, right, in Manhattan. I'm concerned over the overall acceptance if we don't have something in place, some governments in place, that there is a way to have monies returned. Look, if I make an investment in something and I lose all my money, well, that's on me. I made a poor choice or didn't do my due diligence. But I think there is that contractual trust that I'm putting into a bank, and that's what we're accustomed to, and that I'm putting that trust into a company that's going to at least take care of my funds. The investment might go bust, but you're going to take care of my funds. And if we're going to get acceptance from governments in the U.S. and the general population, I'm not sure we can say, well, if they get in, they get in, and it is what it is in this decentralized world. That I don't know how the industry will go further. I don't know how it'll grow with that thinking.
Thank you, Dustin. Thank you, Bill. Let's stick with you for a minute because Sonia mentioned, she said, interestingly, it's the people, not the technology, which I fully agree with. And all of us in this call have had an opportunity to chat with far more regulators and legislators than we thought we would. Lots of technologists. You're deeply involved from the regulatory perspective, from the law enforcement perspective. And one of the things I'm struck by, Bill, is this disparate set of perspectives across the landscape of law enforcement, across the landscape of regulators as well. Is that evolving and getting better over time? When you talk to the different components from a law enforcement perspective, do they get it? We constantly hear, well, it's only for illicit activity, et cetera, but you're doing significant work from a forensics perspective with law enforcement. What's their perspective?
There's the perspective of people that I deal with, and they hear my background. They say, okay, you must be against Bitcoin because it's all, it's all bad, right? And I'll get that initially. And from a few months ago, that may have been my perspective, right? When I was on that side and working that, because that's what I saw, right? That's what I was hit with every day, especially in light of the opioid crisis, where a lot of the youngsters were getting their opioids off these social media sites and dark web, and they were buying a pill here and there, and they were paying with cryptocurrency. So I think the response has been this emergence. I need to at least learn how to investigate it. I think there's still a lot to do in training with, okay, what is the good, what is the bad, how do we handle that? And that is still going on. I like to equate it. Look, when the car was invented, somebody figured out, hey, I'm going to use this car at a bank robbery, but we didn't ban the car, right? As a getaway, we didn't ban the car. So there is still a lot of education that needs to be made to have happen, but we need to also focus on some of the good stories. When we turn on our LinkedIn or the news in the morning and we get our feed, it's the hacks, it's the dark web, it's the overdose story. this is where some of the communities, involved in this need to put out, okay, look, this is also an opportunity for some country or for some new business to trade internationally and make money without the fees and high fees and stuff like that. So yeah, there's more to be done. That's for sure.
Yeah, let me open that up for Sonia, Dustin, and David as well. Given the conversations you all have, any perspectives on Bill's commentary?
So I think what Bill said is really right in terms of, and I'm stressing on the point again, is that you have to teach people to close their doors and windows, right? They may be on the 20th floor, or they may be, on the ground floor in Trenton or whatever. They don't close their doors and windows. If you don't teach them how to manage their private keys and, how do they store it, a lot of people have not learned how to do that. I mean, so that education is important, and kind of taking it to the grassroots level and explaining it to people that how do these wallets work. And it could be the exchanges educating them, or it could be the likes of ISACA or Wall Street Blockchain Alliance doing it. But it has to be done. This is very particular in this particular context, more than in the traditional finance world, because there's a lot of retail investors out here, and they are not educated about managing their wallets, effectively. You heard so many situations when people are losing the keys, but getting them, until you get the retail investor educated about how to manage their keys, and they keep losing it, or if they get into these kind of hacks or get approached by different scams and stuff, this industry will get a bad name in some way or the other. So the education of the grassroots level, about the wallets is very key, how to manage the keys.
Yep. Thank you, Sonia. Dustin, David, before I go to you, for anyone else who's in the audience, we're running up about 5 minutes before the end. If you have any additional questions, let us know. Dustin, David, anything you wanted to add to that commentary?
Yes, actually, Ron, there's a couple of really important points. I think, for starters, there's a lot of outdated information about how the industry works, the vulnerabilities, the use of crypto for illicit purposes. And I think we see that sort of old narrative filter through, whether it be, letters from Congress, in conversations when debating legislation. So I think what we need to do as an ecosystem is just really maybe just create a new state of the state and say, in 2021, this is what the industry looks like. And all these old narratives that keep getting cited over and over are, old news. And, like any evolution of technology and infrastructure, things like that, we're not getting credit as an industry for where things have evolved to. And, look, we've had gains where people are using crypto for illicit purposes and they've been arrested, with sort of inappropriate materials for underage children and things like that. So there's a lot that's been done, and I don't think that the community and the ecosystem has gotten credit for what the state of crypto is in 2021, and not these old narratives from 4 or 5 years ago. And I think we all as a community need to make sure the updated narrative is shared and understood by the group at large. And what I'd say for retail investors is, we get phishing scams all the time, unrelated to crypto completely. We get text messages where you click on a link and somebody's trying to attack your phone. So I think we can't silo the fact that these kind of incursions go across all different types of technology. And we just can't allow this part of the world to be the focus that this is only happening here. It's happening everywhere. And actually here you have more sophisticated people who can deal with these challenges and remediate.
David, I still get emails claiming that they have $35 million for me from some central bank someplace. I never click on those links, so that's hopefully some good advice. I want to wrap up. We're coming to the end. I want to give each of you a moment or two for closing comments, and then I have what I now often do, which is ask the prediction question of all of you. But Dustin, let's start with you. Any closing comments, any closing perspectives? Thanks so much for being here. I wanted your closing thoughts.
Sure. Yeah, absolutely. And I think there's two things going on here. One is we're getting mixed messages from everybody, right? We have Janet Yellen telling us that, cryptocurrency is only used for nefarious purposes. Then we have Elon Musk who's accepting Bitcoin. Then we have Mark Cuban who's accepting Dogecoin, right? So we're kind of getting these mixed messages from all levels of our society, at least in the US, right? From both the capitalist side and then, also from the government side. And so which is it? Is it funny money or isn't it? the US government really needs to step up and just tell us what they want to do with it, right? And I know that, especially in the Wall Street Blockchain Alliance, there have been lots of emails flying back and forth about the legislation that they're trying to pass and what's going on, and they still can't quite figure it out. On the other side, we have this group of individuals who are technologically inclined, who understand this better than most people, even some of those who wrote it, right? Which is what we're seeing now. And so they're receiving these mixed signals. They know the technology better. They can, go in and take some of these digital assets, and then is it really theft to them? And it's hard. Yes, it is, right? I'll make that statement right now. If you steal a crypto asset, it is theft, right? But I don't blame them for being confused about it. And I also kind of see on an understanding side of what happened with this hack, where the Mr. White Hat, goes in there, does his gray hat hacking, and then realizes what he's done and is like, I'm really sorry. Here's your money back, right? So it's very confusing, but I think with guidance and good leadership, we can kind of we can finally put a lot of this stuff to rest and just get to work.
Thanks so much, Dustin. Sonia, how about yourself? Closing comments. We've only have a few moments. And I want to give Bill and David some opportunity as well.
So I just stress on the fact that we need to learn from the traditional finance world, especially from the structured finance group, because they've actually, as a contract, the derivative contracts were like hundreds of millions of dollars, and there was a lot of security controls put into that. And this industry should actually learn from those lessons, learn from there, because just why do you want to reinvent the wheel? Yes, blockchain is the technology, like I said earlier, but we need to kind of get those controls in from the traditional finance world, and we should kind of look at that. And one more point that David actually put through, which I would like to kind of agree with him on, that is that there has to be okay, what's the state in 2021? Some kind of a a roadmap that we give we educate them that this is what happened in 1970s, and so when IBM stock was X and now it's on the exchange, it's standardized, and how it's being translated into crypto world on different exchanges. So kind of a perspective is important, that where are we today? What happened in the traditional finance and where. So I think that, to David's point, I think that education and that summary is needed by either the regulators coming or from Wall Street Blockchain Alliance. But that has to be done, essentially.
Thank you, Sonia. Always a good session when we run a little bit over. Bill and David, 30 seconds each. Closing comments. Thank you all for being here. Bill, over to you.
Sure. No, I just agree a lot with what Dustin said. But I think we've done this before, right? Yes, it's new technology, it's new. But again, wire transfers were not around since the Declaration of Independence, right? So we've done things before, we've evolved before. It's education, it's showing the good in something and how we're going to protect it from the bad and evil.
Excellent. Bill, thank you. David, last word from you.
Sure. I would just want to reiterate, I agree with what our panelists have said broadly. There still remains a real disconnect between the facts of where the cryptocurrency and blockchain ecosystem is today and where it was years ago. And I think this disconnect is still permeates through the legislative process and in government. And I think we need to do a combination of educating and lobbying as an ecosystem to share where we are now and to make sure that some of the facts that are coming out, which are not consistent with where things are now, are addressed.
David, thank you so much. I got to leave it there. Thank you for all of the panelists. It's always a privilege to be on a panel with all of you. For all of our attendees, we'll share material with you post the event. We will also share the recording as well. Panelists, thank you so much. It's always a privilege. Have a great weekend, everyone. Thanks for joining.
Thank you.
Thanks, Ron.